Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from SilverCrest Metals, and we're going to be recapping the Q2 financial results released October 7th, looking ahead to what the rest of the year holds. Q2 was a very good quarter for SilverCrest with record revenues of a little over 72 million and record mine operating earnings of 41.5 million. That is a 51% operating margin. All the numbers that we're going to be talking about are in US dollars. I'm chatting with Chris Ritchie, president of SilverCrest Metals. SilverCrest is traded on the TSX under the SIL and on the NYSE under the symbol SILV. Chris, as I said, record revenues, record mine operating earnings. Seemed like Q2 is another good quarter for SilverCrest. That was also helped out by the generally higher silver price. Give us a quick little recap, some of the highlights of Q2, please.
Yeah, thanks, Corey. We were very happy operationally and financially. So our Treasury assets we're building, we're executing on the mining side. As you said, record revenues as metal prices were high in Q2 and already higher in Q3. Everything was humming along nicely. I think some of the challenges came with some noise around some non-cash items. But as you know, every time the stock dips for us, it tends to be a good opportunity for people. So, we just want to clarify some of the confusion that seemed to result in the quarter as well.
Okay, let's dive into that because, look, mine operating earnings, 41.5 million, but then you drive down, you see net earnings of 6.5 million or basic earnings per share of 4 cents per share. What were the changes here? What were these non-cash items?
Yeah, without getting to a financial or accounting detail with people, is we have what's called a deferred tax asset, and that deferred tax asset allows us to write stuff off in the future. And that asset is in Mexican pesos. So when the Mexican peso weakens, which was the case after the election, the value of those deferred tax assets decreases. So that means in the future, if the peso goes the other way, then we'll claw that back, right? So this was a non-cash item. And again, as for some people who are in the accounting side, there's a lot of companies out there, especially tech companies, that will give their earnings on an adjusted basis. So they'll kind of take those non-cash items and they'll kind of clean away all the noise and then give you something that's a little bit more, usually better for marketing. But in this case, we wanted to just present it there. So I think the best thing that people can look at in our sake was that our free cash flow per share was 4 times better than our earnings. So it's a bit of a head scratcher, right? Your earnings aren't that good, but your free cash flow is that much better. So it just shows you that at the end of the day, the cash coming into the business, the cash hitting the balance sheet, that's the true test of how a company's doing. And in our case, that was 16 cents a share versus the 4 you mentioned on earnings. So I think the market hinged on those earnings numbers as opposed to the true sign of health, which in our mind is free cash flow.
Let's also talk about Treasury assets then. The balance of holding cash and holding bullion. Treasury assets did increase to a little over $122 million at the end of the quarter. That's up from just over $91 million, so a 34% increase. The balance between buying bullion, holding cash, look, it means a lot to have a stronger balance sheet with simply cash and bullion, but how are you balancing out this strategy again of you're adding to the balance sheet, but do you hold cash, do you hold bullion?
Yeah, I mean, our Treasury assets are up 34%. So again, obviously for us, that's a great quarter to build that up. So we're quite happy about that. And when we think about what to do with that, we have more than enough cash on our balance sheet to make sure that if something happens on a rainy day or if the stock really rolls over, we're able to buy back more shares like we've done in the past. But in the meantime, what we're looking at is we want to give our investors more exposure to bullion, right? An ounce that we hold in our hand above the ground captures all of the upside for our investors. Whereas an ounce in the ground, well, you still got execution risk. You still have inflation risk, all the other stuff that can get in the way. So the ounces we hold above the ground, we think are healthier. They have more leverage, and we're taking ounces out of the market is a big deal. So we still look at capital allocation, giving our investors more ounces or more exposure to bullion. But we do have cash that if things get really ugly out there, and you've seen that for people like Warren Buffett, he is holding the most cash ever. So if there ever is a big washout in the market, we want to be rubbing our hands together with a smile and be really quite opportunistic at either buying our shares back or buying more bullion in those moments. So we're quite happy with the amount of flexibility we have. And again, we've talked about that in the past, that flexibility all comes from the fact that the asset's working really well.
Now, one little nuance here with these bullion holdings, during the quarter, you added about $1 million in bullion holdings. Subsequent to the quarter, though, you added 7.6 million of bullion. That's how much was purchased post Q2. Why was so much bullion purchased post Q2?
Yeah, a big part of what we're looking for is, again, to be opportunistic. So if the market rolls over a little bit and we see weakness in there, like, we want to be jumping at those opportunities to buy more. So again, when we saw things roll over a little bit, we stepped in and bought more bullion. So again, that flexibility and patience is part of that. So for us, we didn't add as much in Q2 because Q1 cash outflows were there for the tax. So the way our program works is we're allowed to buy a certain amount of our free cash flow. So Q1, we didn't have as much cash flow because of the tax payments. So now that Q2 was playing catch up a little bit, our capacity to buy more increased. And as soon as we saw some weakness, we stepped in and bought some more. So now that you see silver popping back today, and gold's been extremely resilient, even with that for a couple of weeks ago, gold's been resilient. As people know, we're about 45% of our revenues are in gold. So we're sitting here now going, hey, purchases for us. So we want to be opportunistic for our shareholders when things dip. So we're quite happy to be buying more. Those purchases are already in the money. And as prices get better, it just means we're going to have more capacity to keep adding more when the time.
So the company also has the opportunity to buy back shares too. So we have seen the share price dip this month, especially. How do you balance out buying back shares or continuing to buy bullion?
Yeah, both. And when we think of like other things, like developing things, exploring more, like all these things are choices that come with the flexibility. So to see a balance sheet growing means you've got that flexibility, right? So I think right now, these are things that are all on the table for us. So right now, we really like that rollover in the metals recently, and we're quite happy to use that chance to buy more bullion.
Let's talk about how investors are viewing this stock then, because as I said, it has sold off a little bit this month. That's gone hand in hand with the silver price. But what can you tell us about what you're hearing from shareholders, even bringing in new shareholders? Any insights on this?
Yeah, I think some of the confusion around the earnings number, that we definitely got some feedback from people who were a little confused with what went on in the quarter being weak. And many a conversation with people there trying to clarify that accounting issue essentially, and make them realize that, hey, we're A-okay. We all know that quant funds are a little more active in the market, and we certainly benefit from them at time. In the recent run up in our stock, I think we were, closing in on over $14 Canadian for a little bit. Stocks really pulled back because I think some of the same capital said, oh, earnings weren't great, get me out of this thing, it's not doing well. When in fact, again, that cash item based on the volatility of the Mexican pesos, nothing to do with the asset. So I think, as for looking at this name for so long historically, we look better and better versus our peer group when things are weak because of our balance sheet, right? Because of our resiliency. So I think typically in the past, whenever our stock is rolled over, it's been a good entry point. For some of the institutions, we've definitely had a few more inbounds and people saying, hey, I was using that chance to do some buying. But as you discussed, like, what have we learned about shareholders recently is, we track pretty closely the number of shareholders we have and whatnot. And we have noticed an uptick in the amount of retail holders. That part of that is to do with our differentiated strategy of wanting to hold more bullion. And the hope there is that if we can continue to find more shareholders that support this strategy and they nibble away and buy a few shares and tell other companies that they like the strategy and they want to see more people doing it, then we got more companies holding back metal. We got more companies using gold and silver to hedge their own costs. So we have seen an uptick in the amount of retail holders. We hope this dip in the price back in. especially now once we're clearing up some of that noise around the earnings being a quarter of what the free cash flow was, while at the same time you're seeing gold push up against 2,500 again. And the gold to silver ratio is at like 90. 90 has been pretty near peak levels for that. So it bodes really well for silver. So we're pretty positive in terms of how the asset's looking and what we're seeing from people, which leads us into the guidance side, which I know you wanted to talk about.
Yeah, let's start looking ahead here because you did improve on yearly guidance, silver equivalent ounces, cash costs, and all-in sustaining costs. This ties in with mining rates in the last quarter of right around 1,100 tons per day, but you had 2 mining contractors on site. So how will all this play into the back half of the year?
Yeah, I mean, you talked about what we're doing with our money and how we allocate it. So we decided to keep the existing contractor and see if we can do more to de-risk. When we put out our guidance at the beginning of the year, we thought we would exit 2024 with a mining rate of 1,050 tons a day, right? And we know that we have the stockpile as well to help us out. We're already above that rate. And if we can keep spending capital to continue to do better than that 1050 and see if we can get that even higher, again, we're just reducing risk. And if the assumption is costs keep going up year after year, or we spend today at today's prices, we look at that as a cost savings when it comes to future costs always being higher. So that number for us, that was a great operational data point to show that we're already above what we thought where we thought we'd be at the end of 2024. And again, when you look at what we did on the guidance for our costs, we improved our cost guidance. So we were already at the end of H1 below for our cash costs and our all-in sustaining costs. So we wanted to give some to the market by decreasing our cash and all-in sustaining cost assumptions for the full year. So hopefully that was something people got excited about. And at the same time, we increased our guidance in terms of sales. So again, the market sold off on basically the impacts of the Mexican peso FX rate, when in essence, we had our guidance improved on cost, our guidance improved on sales. We're buying more bullion, and the metal prices are already higher in Q3 than they were on average in Q2. So we think this noise is a good opportunity for people who know the company and know the asset really well to dip their toe back in.
So let's talk about M&A then. We've seen some actually very big deals. Filo being bought out, Osisko, that was recent news that just broke. All these coming at premiums. Again, some bigger deals coming in the mining sector. When people look at SilverCrest, are you a potential acquirer or are you a potential acquiree?
Yeah, and I mean, I think that's an interesting question. We get asked that a lot. And again, I think what we've discussed in the past as to how we allocate capital gives you a sense of how we think about the cost to replace assets. So if someone today was to start from scratch and say, I'm going to buy a piece of land, I'm going to explore it for 10, 15 years. I then have to go build the plant. I have to then develop the mine, are on top of your all-in sustaining costs, which again, your all-in sustaining cost 10, 15, 20 years from now is most likely higher than today's cost. So I think what we're seeing today in the market is a bunch of companies out there saying, I get to go buy a company today where I know exactly what I'm getting. I know that they've already run the gauntlet on finding an asset, already sunk a lot of that capital. And I think that needs to be compared with, okay, go do it yourself from scratch, take the time and the capital. I think that's the conversation that's not being discussed when it comes to organic growth or greenfield growth or M&A. So I think the fact that we hold the ounces, or the fact that we've already got an asset that has proven to be a really high margin, high free cash flow asset, puts us in a really good position in both departments.
All right, Chris, thank you very much for this update. I'm going to post a link to the SilverCrest Metals website in the show notes. Everyone can read over those recent Q2 financial results. And please continue to send me any questions you have for Chris regarding the asset and regarding the corporate strategy. I'll get those answered for you and get Chris back on for more updates as more news comes out. Chris, again, thank you very much for your time today.
Thanks, Corey.